Okay, I can just lift it up when it's, yeah.
Okay, guys, how's it going today? Happy Saturday. Saturday afternoon for most of you. I just see the comment from Joe Bob there. Good morning from Hawaii. Joe, I'm located in Calgary, Alberta, so I'm sure you're having a better morning than I woke up to today. Not too bad. Today, you guys, we're going to be going through a number of different items here. We wanted to talk about some news from the week. We're doing a lot of live podcasts this week. We have a few articles of news, including some big news out of Marathon with their new 50 exahash goal for this year. So we want to talk about that, some of the activity we're seeing in terms of Bitcoin price, network difficulty, hash price, and then we're going to obviously move into your Q&A section, talk about some of our favorite companies in our analysis. We can cover Cypher, some Core Scientific, Bitfarms I know has come up a lot, TeraWulf. No shortage of questions going on right now, you guys, so we'll get right into it. Anthony, first and foremost, how are you doing? Thanks for joining us on the weekend here.
Yeah, great to be here, Bryce.
It definitely is. So let's kick it off here. We've got a new presentation mode I'll jump into, Anthony. Let us know what you guys think of this, if it's big enough to read and the format. First things first, though, Anthony, Marathon Digital came out with a huge announcement here, increasing their 2024 hash rate target to 50 exahash. So really putting them in that top echelon with the likes of Riot. What was your take on this? Marathon, obviously one we both hold. We've been a little bit frustrated with production consistency since those December records were set. But this is a pretty big announcement, hey?
Yeah, and it's not totally unexpected. I mean, we've been articulating how big their treasury positions got since the start of the year. You know, they've got, for the last couple of months, they've had about 1.5 billion in terms of cash and Bitcoin in their treasury. So, we're waiting for like the big machine order coming through. Now, they had an initial target of 35 exahash by the end of 2024, which to be honest, was probably a reasonable hash rate to achieve. And if you think that they're at close to 29 exahash at the moment, so maybe adding another 6 exahash, that's probably half the target of some of these other miners, some of these smaller miners in that sort of tier 1, tier 2 bracket to get to where they need to be by the end of the year. But then this announcement came out towards the end of last week, and it's considering they've purchased these 3 big sites in the last sort of 3 or 4 months. They realise obviously they've got capacities now to sort of grow those sites. They gave notice to Hut 8 Corp, who were the managers of the Kearney and the Granbury site. And that will change on Tuesday when they leave, and so that then becomes under the control of Marathon Digital at that point in time. So it looks like they've got capacity, but it's going to be a 20 exahash jump between now and the end of the year. And bear in mind, we're at the end of April now, so that's 8 months left. Hopefully they've learned from the past, because we know in 2021, 2022, when they were trying to get that initial 23 exahash, they had a lot of problems getting there, and the fact that they didn't have the sites ready to put the machines into. They'd ordered the machines, well in advance, and as we know, those machines were sat around in garages for the best part of a year, not earning any revenue. So maybe they've learned from that now. They're moving to a position where I think 55% of their total fleet will be under their control. So that's a significant move from the asset light model that Fred was, discussing for the last couple of years. But it's a positive update. I mean, that's what we want to see. We want to see, the biggest miner growing, and with the likes of Riot Platforms putting their growth strategies for 2025 to get them all the way up to 50 to 75 to even 100 exahash, and CleanSpark also looking to get to 50 exahash by the end of 2025. It was just a case waiting time for Marathon to come out with their realistic target. So it's an ambitious target. 20 exahash between now and the end of the year is ambitious. They've got the sites, they've got the money to buy the orders, and we haven't heard any real issues about machines not being delivered on time. It seems to we don't have them issues that we had a couple of years ago where miners were scrambling to get orders in, and there was a 6-9 month lead time. So I think it's a positive update. I think people enjoyed seeing that when it came out.
Yeah, I definitely did, and you're right. We don't have the same supply chain constrictions that we had a few years ago, Anthony. Now, Tony has asked. You mentioned they already have the sites for this. Do you have any concerns about actually getting access to that amount of power to power 50 exahash worth of compute?
Again, I think they've learned the lesson from previously. I don't think they'll put out this sort of announcement without having done some due diligence and worked out what they require between, now and the end of the year. And these sites were pretty big. They've got the Applied Digital site, which is a recent acquisition, and they've got the Kearney and the Granbury sites in Texas. So, those were, significant megawatt sites there.
Yeah.
That will help deliver, some of this, some of this increase. And
Gotcha.
it wouldn't surprise me if they go out and search for more sites, in the next 18 months to sort of fully go infrastructure. I think they realise that's the way to go forward. Yes, there are costs incurred in doing that, but it's the control. And if we look at the last 3 months of production updates, they've been fairly poor in terms of where you would have expected them to achieve. They weren't even though they've got a hash rate nearly 10x higher than the next miner, they weren't even achieving the highest amount of Bitcoin. It's going to be a close run thing in April to see if they can eclipse Core Scientific. I think it's fairly neck and neck at the moment. So it'll be interesting in the last few days of April what those totals look like. But it looks like the totals, because of the halving, are going to be less than they were in March. So we'll see a drop in production. We'll come on to that in a second.
Yeah, we're going to come on to that. The other thing I was going to say, Anthony, is the asset light model. Not only do you get more control when you go to the vertically integrated, but that's where we're finding a lot of the value is actually created for these companies, is owning the data centers, the infrastructure, and looking at other applications down the road aside from Bitcoin mining. If you're just hosting, at the end of the day, you don't have anything to show for those investments, right? Now, guys, we just hit 43 viewers concurrently, so make sure you smash the like button. You guys really helps get this stream out there. We've only been running 7 minutes, so it'd be great to get a bunch more people in here before we get into the Q&A. Speaking of Q&A, get your questions in the comment section, you guys. We're going to be doing first come, first serve, so make sure you let us know which companies you want to hear about. Now, interestingly enough, Anthony, the Marathon news here, it sparked some additional debate on our good friend X with Rex Finance. So he came out with a tweet here saying the more and more I look at this, he thinks Marathon may be looking to acquire a company like Bitfarms. So some Marathon M&A drama out there. Now, you've addressed this in prior videos, basically saying you can't just look at market cap. There's a premium assigned when you actually go and buy out a full company. What are your thoughts on Rex Finance prediction here, or at least discussion around a major acquisition post-halving?
I think the only similarity to the Marathon update is the fact that Bitfarms are going for a target of 21 exahash by the end of the year, and that's probably about the amount that Marathon Digital need to achieve to get to 50 exahash. But that's pretty much where it ends there. There is no way in this world that Marathon Digital are going out there and buying Bitfarms. And we've explained why before. It's the cost of buying Bitfarms, which is it's valued at probably just under $700 million as it is at the moment. And a company starts buying shares to create, get a 10% stake in that company, and the share price will go up, and then they go in there and make their options to say they're going to buy the company. That'll be a premium price. And in the tech industry, 30-40% could be the premium price. So you have 40% on top of that. That takes Bitfarms' market capitalization then to probably about $1 billion. We've already articulated, what CleanSpark are doing, growing their hash rate and how much they've spent. So if they were to, look at what they've recently bought in terms of facilities and exahash, and I did a sort of like a simple model based on, if you were just to grow 7 exahash, how much it would cost. And bear in mind, Bitfarms' valuation at the moment, they have a hash rate of 7 exahash. It was trying to look at comparison that way. And to buy the facilities, you're looking at about $8 million per exahash. So even if you turn around and said, let's call it 10, just so there's a little bit of a premium on there. There's a shortage of sites, so you pay a little bit more. So call it 10 million per exahash. You want 7 exahash, that's 70 million. Then you look at machines, and the machines are going to cost you about 16 million per exahash in terms of what the miners are paying at the moment. So the likes of Marathon could certainly, with the power they've got of their size of their company, they could command probably at at the highest, probably 16, probably even getting closer to 14. But let's use 16 million as a figure there. If you go 7 16s, that's 112 million. Add that to your 70 million for your infrastructure, and you're at 182 million. So why would you be spending $1 billion buying another company when you can go out there and do this from the ground up and have new machines? I mean, bear in mind, Bitfarms' current efficiency rate for their machines is I think it's close to 31 now. It was 35, and in comparison at 35, in comparison to all the miners that we show in our analysis, that was probably the highest efficiency. Which isn't having the lowest efficiency is a good sign. So having the highest efficiency, because they had an older set of machines compared to peer miners, they hadn't been replacing machines in vast chunks. What they've been doing over the last 18 months, 20 months, getting the debt down. That was their focus. We've articulated that in a number of podcasts. What you'll see now is, as Bitfarms grow to 21 exahash, that efficiency will come right down into the low 20s. That'll get them where they need to be, because all these new T21, S21 miners that they've ordered will smash that efficiency all the way down to where it needs to be, and they'll be in a better position there. But you're not going to, Marathon are not going to pay $1 billion, even if they pay the market capital price of 700 million. They're going to get older machines in that package. I just can't see it working. Shoot me down, and I'll leave Twitter if they do end up buying it, and I'll bow to Rex Finance as the almighty in terms of analysis. But it's a great conversation piece, and it gets a spark of interest out there. But we need to be a little bit realistically. There's only been one proper merger, and that was HUT and USBTC. All the other ones is where you've seen companies go after distressed assets. So this is when companies are in real difficulty. They've got cash flow issues. They've got to sell. Bitfarms themselves, go back to 2022, they were selling XPs that were still wrapped in boxes because they needed cash flow, and they were selling them for significantly less than what they paid for them, just to get cash flow in to pay down the debt. That was their focus. How can we drive the debt down? And they've done that. They've got zero debt now, so they're in a really good position. But to get there, they made some real sacrifices, and so that's what companies could go in there and buy distressed assets like that. They're not going to go in and buy these companies. You're not going to go and buy like Argo Blockchain, a company with probably about $50-60 million of debt on the balance sheet. And a lot of these other smaller companies have got debt as well, and you would be paying even if you go down to some of the really small miners, you'd be paying a premium still on what they've got. And we'll come on to some of the balances, but I just thought I'd just sort of like put my thoughts on that sort of like that.
No, it makes sense. I'm in the same boat, Anthony. Why would you pay a premium when you can buy brand new or build new, right? So we'll get into some of that. We actually have a slide talking about market cap of some of these companies in a second here. But before we do, Anthony, I wanted to give an update on hash price as well. This is one that you and I have been watching a little more closely here since the halving took place. So this is a good look over the last month, you guys. This is from hashrateindex.com. If you haven't taken a look at this before, I would definitely encourage you guys to go take a peek. It's essentially the amount of money. You can change around the duration of time or the units of hash power, but essentially the amount of money that can be generated by a certain amount of hash power in a one-day time period. So you can see prior to halving, we're sitting in the 100, 110 kind of range there. Then we see that big spike down to the 60 range right on halving there, April 19th. And then what no one really expected on the backs of the runes activity and the increased transaction fees, a spike up to $183, Anthony. So that's why people were calling this the tripling rather than the halving. However, things have calmed down. They've gone back to expected levels. Now we're tapering off in that $50, $55 kind of range, which is really exactly where you'd expect if you were to take half of 110 or whatever, right? So this is kind of an interesting graph, obviously very unexpected. We've also got the difficulty, which we're going to talk about next, Anthony, some surprises there. What was your take on the hash price here? And did you expect this transaction activity post-halving?
Nobody did. There was always going to be an expectation that the actual block, um, 840,000, the actual halving block was going to create a premium for that, and it has done. I think it was like close to $3 million in terms of rewards for that one block. But you can see here pre-halving the hash price, and this is in dollars. So this is the amount of dollars that a miner would receive in revenues each day for every 1 petahash that they have of mining power. So prior to the halving, these miners, and you can look at the sort of like it's sort of between 100 and 120. So say an average of about $110 per day for each petahash. And obviously then it dropped at the halving, but it spiked to $183. Just literally 24 hours, and actually we were on a live stream as that price was shooting up towards that, so we were able to sort of like discuss that as it was happening. It came down, and then it had another sort of like bump. But I've looked today, the fees today are significantly lower than they have been since the halving. Now they're still slightly better, and I'll say only fractionally better. They might be a few percent better than they were per block prior to the halving. So there is still obviously some transaction fees. These, I saw a tweet the other day. 80 of the 81 highest blocks in terms of transaction fees have occurred since this halving. So that puts it into context. Since Bitcoin was created, 80 of the 81 highest transaction fee blocks are been since halving occurred. So there's been a real spike, and in that sort of like 24-hour period, from the 19th to the 20th of April, just to put that into context, there was more rewards achieved that day from Bitcoin miners than the whole of March. So that tells, again, it tells that re-emphasizes that story. There's a lot of fees earned there. So, we saw Core Scientific have a fantastic day. The 24 hours following the halving mined over 57 Bitcoin. Incredible. Now they were mining the 3 days prior to the halving. They were mining an average of about 30 a day. So
now, Anthony, one thing that's really interesting as you're talking about that, obviously a very finite amount of time where these increased transaction fees and these specific rare blocks were available, right? So it really favored those companies who were able to get lucky enough and hit those block rewards. Klaus has a question here. So Marathon has their own pool. And from my memory, they didn't have a ton of luck in those first couple initial blocks. They've started to have some bigger block days now. We've also got pools like Foundry. I think they actually did pretty good in terms of those initial blocks. What are your thoughts on kind of the dynamics of the pools themselves? I know you've used the number 2% in terms of luck being attributed to kind of these pools in the past. So I guess maybe explain that for everyone watching. You're saying if everything is working as intended, equal and being distributed as intended on the blockchain network, really you should get what you're expecting to out of your equipment plus or minus 2% using this analogy. Hey, is that correct?
Yeah, the look really comes in for some, like if you were like an individual, like you had a 5 or 6 mining machines and one of them actually won a block. That's a look factor. And what that does then is it takes that block away from all the pools. So they're not quite getting what they expect to get. But when you're looking at one block out of thousands of block, that's the sort of like that's how you look at the percentage from that point of view there. So, if Foundry has got 30% of the network, there's a good chance they're going to get very close to 30% of the actual rewards for that period. And it's a bit like buying lottery tickets. If you've got, 1 million lottery tickets and you go out and buy, 500,000 tickets and there's 10 prizes, you'd like to think you'd win 5 of them with half the tickets available. That's the look. It's a look factor. These machines are searching for that one number.
And I guess, Anthony, to use the lottery factor, it would be like an office lottery versus an individual. These pools are essentially saying, hey, we're going to pool all our efforts together. We're going to share the rewards. So it essentially takes away risk.
That's what they do, and they stipulate you can have various types of agreements with these companies. You can have an agreement that says you will participate in a pool and you will get what the pool achieves, or you can actually have a contract with the pool to say, we are providing 5 exahash or whatever your exahash total is to that pool, and we want to have what the expected amount is, and there might be a couple of % off for that. So there's so then you guaranteed a lot of these miners go for a guaranteed revenue stream, and they shave maybe a couple of % off the there might be a pool percentage that they lose because they're taking a guaranteed amount, and the luck factor comes in when we're talking about one pool might get one block more than they should have done as well. So the luck factor then can work in both directions. So but I think I've spoke to some of the CEOs, and they say they tend to go for a guaranteed revenue stream, which means that the pool itself will take the risk of maybe not getting sufficient blocks to pay out that, but they have to pay it out. So there's a risk reward there, and they'll get a little bit of a percentage for that there.
Interesting. Yeah. Okay, cool. And I want to talk about another factor that's also provided quite a surprise to us: difficulty. So we'll move along to this slide here. Let us know what you think of this presentation format, you guys, if you can read this, if it's nice having us on the screen. We just put this together before the live stream, but we thought it's a little bit easier to follow along. So difficulty, Anthony, it was widely expected. I remember myself saying I would expect difficulty to drop 20 to 30% post-halving as the old inefficient machines come off. They're not financially viable anymore. However, just like everything else, I guess, in the Bitcoin world, there was a bit of a surprise here. So we saw difficulty actually increase post-halving. What did you make of this?
This was the first time these difficulties increased post a halving in the 4 halving. So every time previously, because the natural, when you're reducing rewards by 50% and your costs don't change, it naturally expects the less efficient miners to come off the network, and that hasn't happened this time. So if we look at difficulty from January the 1st to current day, difficulty has increased by 22%. And what does that mean? That means that it impacts on miner production by that percentage. So as difficulty increases, every miner is having to use more power to produce a Bitcoin than they did before. So the rewards, the benefit is not as good. So they've lost, that gap there. Now, the reason it's not impacted the miners this year to date, and also last year, is the fact that the Bitcoin price has risen as well by more than 22%. So they've had a benefit in revenues there. So this chart here says that the difficulty is, even the second difficulty, the difficulty went up 2% a few days ago on the 24th. So post the halving, which occurred on the 19th or 20th, depending on which time zone you're actually living in, the difficulty went up by 2%. And it's already saying now that in 10 days' time, at the moment, and it's a very rough estimate, these can change quite quickly, but at the moment, they're still saying difficulty is going to go up another 1.18%. And as that date gets closer, that number becomes more rigid then, so it's sort of estimated at the moment 10 days, but as you get down to the last couple of days, you'll have a good understanding, because what it says on the right hand side there is the Bitcoin block time. So at the moment, every block is being mined in less than 10 minutes, and that is the time that the difficulty adjustment adjusts back to. So miners are mining blocks easier at the moment in terms of, because the global hash rate is increasing, so the blocks get mined a bit quicker. When the difficulty gets adjusted, it makes it harder for the miners, so it takes that time back down to 10 minutes, and it starts again. And so
I was actually watching an interview with Zach from CleanSpark talking about what difficulty actually means in terms of how it physically changes. So correct me if I'm wrong, Anthony, but all of these miners, they're essentially searching for a string of letters and digits, right, to solve the next block. And what they'll do is when they adjust the difficulty, they actually change the length of that answer. Is that correct?
Yeah.
Yeah. Interesting stuff. It's just incredible to me, the technology behind the Bitcoin infrastructure and blockchain. And that's what a lot of people forget in this mining space, Anthony, is the miners are required for the network to operate, right? So a lot of times people say, oh, well, we're getting a disconnect between the price of Bitcoin and the Bitcoin miners. Eventually they'll catch up because Bitcoin cannot operate without the miners. But a lot of people just don't even realize that when they're looking at it purely from an investment standpoint. So very interesting on the difficulty, Anthony. Anything else to add here? Do you think this is going to continue now to trend up throughout the year, or really dependent on Bitcoin price?
I think it depends on Bitcoin price. That's driving difficulty, because as the Bitcoin price increases and increases at a faster rate than the difficulty is, so the fact you're able to get less, you're getting less production. So if you were mining 100 Bitcoin in January, you'd be mining 80 now with the same hash rate in April. That's how the difficulty would work. You're over 20% less production. But
Gotcha.
but the Bitcoin price was 42,000 at the turn of the year, and now it's 63,000 or 62,000 today, or whatever like that. So that's like a 50% increase of where it was at the start of the year. So you're actually getting more revenues, but actually physically Bitcoin, you're getting less.
Yeah, well, and a great example of that is actually the next slide here, Anthony, talking about Core Scientific production. So I believe this was actually for Thursday, you guys, or Friday, maybe it might be one day old, but they were mining a tremendous amount of Bitcoin here post-halving when we saw that hash price spike. Now it's tapered off considerably. So Core's was, we were actually talking about how consistently they were hitting the 28, 30, 33 kind of range. Now that's virtually been cut in half as expected, down to the 16.2 range. Do you think this, Anthony, is sustainable for a lot of these miners? Obviously, the halving, we talk about whether or not it was priced in, but these miners have been looking forward to this or preparing for it for years and years. We've actually heard some CEOs already talking about the 2028 halving. Do you think this is any shock to them, or do you think this is now kind of expectation?
No, this is what they were expecting, 2 months ago, that, they'd be getting. So, I already articulated Core Scientific, the 3 days before the halving, we're averaging about 30 a day. So, by reducing that by 50%, that's 15. So even on the 25th or 26th of April, they're achieving 16.2. That's still about 6% more than they were getting. In terms of where they should be. They should be around closer to 15. If you're looking at 50% less rewards from an average of 30, it should be 15. And the difficulty has gone up a small percentage as well. That's gone up by 2%. So, you shave something off the 15, but they're getting 16.2. So that extra 1.2, 1.3 Bitcoin that they're earning higher than expected helps them. And the Bitcoin price, also helps them as well. Because again, when they were doing their plans back in sort of like January, February, the Bitcoin price was nowhere where it is today. So, you're doing a plan for the year. And if we look at some of the miners, when they, in some of them presentation, the miners, they've been really sort of like pessimistic on the Bitcoin price. I mean, some of them were having like, 30, 40,000 Bitcoin price in there. And now they'll probably have to redo some of those presentations to get them like more up to date. And it will help a lot of them. So, these Bitcoin miners were mining when the Bitcoin price was 15,500 in December 2022. None of them switched off then. I don't think they were switching off now either. We've got on the 30th of April, we've already mentioned in previous podcasts, you've got the Hong Kong ETF opens. So the impact of that, we'll see how good that is. Bear in mind, that's a hub for Asia to go in and start buying Bitcoin in certain investment wrappers. So that might again give it an almighty move up again. So that I think that the ETFs this year have been the dynamic that's changed where Bitcoin is at the moment. I think that's the one big factor. The halving's got nothing to do with it. It's more the ETFs. The demand for Bitcoin from those ETFs far exceeded anyone's expectation. And we've had this, where what Bitcoin did in 2 months, it took gold 2 years to do the same with the gold ETF. So, this is a phenomenon at the moment. And even today, listening to some analysts saying, they expect significant more money coming into these ETFs over the next 12 months from the baby boomers.
Well,
once they
it's so
start.
accessible now, right? As soon as people
Exactly.
start to get that FOMO, they have an easy on-ramp now rather than trying to set up a Coinbase account or a BitBuy or whatever and get their passwords in there and ID and all the rest. Now you just throw it in your brokerage account. So I could see that really changing the game quite a bit, Anthony. Now, question from Mikey Vegas. Do you know of any other companies that report daily like this? I know Core's, and I really actually like how Core Scientific, they just started doing the month-to-date total rather than you having to add it up. And then the year-to-date total, I know they just changed that. Does anyone else do daily, though, like this?
I don't think there's anyone that does dailies, but believe you me, when one miner starts to do things slightly different from another miner, there's a bit of like want to keep up with the Joneses. So I've mentioned this before. You go back 3 years ago and look at the mining updates then, there were 3 lines. You look at it now on a monthly basis, it's like War and Peace. It takes you about an hour and 15 minutes to go through the update, and then you've got to sort of like read it twice because there's so much information there on some of these mining companies. And also the fact that, the accessibility to some of these CAO now is far greater than it ever was. And as I say, let's hope that's the ability for people to have that access to them where they can ask a question directly and get an answer. It's fairly unprecedented. But it's great when the Bitcoin price is going on. Everyone wants to come on and talk about Bitcoin when the Bitcoin price goes on. Get them to come on when it's dropped like 50% or something like that, and see if they're going to spend time of the day doing it then. But as the Bitcoin price rises like this, they all want to come on. I've seen, I think Dan Roberts is coming on in early May onto the Bitcoin Mining Guy Spaces meeting. So it's going to be it's good while it happens, but. Yeah, I think we had 3 or 4 miners put the price to mine a Bitcoin on their monthly updates from an energy perspective. So TeraWulf, SATO Technology, and IREN tell you how much it is to mine a Bitcoin, and they are vastly different. So we've seen Riot Platforms start to put the operational hash rate now, that what they physically are able to achieve at the site in Rockdale, and so every month. Things are being added. And I'm going to take...
We had that discussion in our interview with Jason. We talked directly about that.
I'm going to take a little bit of the credit for this because I spoke to miners, 2 or 3 years ago and said, is there any chance we can have more information? And they obliged me with that, and as soon as a couple did it, the rest followed. And now you're starting to see, a real amount of information is readily available. And with that information, then you can get people to start speculating on, what the earnings are going to look like before the earnings come out. Because a lot of the information is there for you. If a company's telling you how much it is to mine a Bitcoin and how much the revenues are every month, you can probably plot the 3-month quarterly quite easily. And as we said before, the operating costs are generally fixed. So you can look at the previous quarter operating costs and you can put those in and get some sort of semblance. So when we get some of these updates for, how much it is to mine a Bitcoin, it's not wholly too difficult to do that. I've done it, quite a few times. I've written many articles on the cost of mining Bitcoin with the miners in this section here, and other analysts are starting to do that now.
Now, this is a very timely question from Nikki here on the screen. So, Anthony, we've almost got 100 people in here now, you guys. We're going to get into the question and answer part. We've got a really interesting market cap comparison slide next. So, Nikki, very timely comment or question here. You guys make sure you hit the like button. It's Saturday. We're taking our weekend to do this. We'd love to get as many likes as possible before the question and answer period so we can get a far reach, get the YouTube algorithm helping us up. We've also got some new power mining analysis swag here, Anthony. We got the hats, the shirts in. So if anyone wants to become a member of the channel, we'll mail you out a hat or a shirt and maybe a bit of swag from the power mining analysis umbrella. So you guys, we're going to get into the question answer here. First up, though, Anthony, really interesting graphic here. Pulled this off my Yahoo Finance. So it basically ranks all of the miners we cover on our channel, plus some of the more popular other ones like Argo Cypher, for example, by market cap. So you'll notice Soluna at the top, just north of $7 million Canadian, US. And then at the bottom, obviously, Marathon north of 5 billion. So this is really interesting, Anthony. The other thing I like about this slide, obviously, you can see current share price, volume, some of the trading metrics, but you can actually see where the current share price is relative to their 52-week range. So it's kind of the third column there from the end. And as you'll see with this, Anthony, most of these miners, really with the exception of CleanSpark down there. We've got Cypher, and it looks like DMG are kind of in the mid-range. Most of these miners are in the lower half of their 52-week range, despite all of the positive all-time high in Bitcoin price we've seen, the ETF, the Hong Kong ETF, the surge in runes and transaction fees, a lot of beneficial things to these miners. We had Ben Ganon on the channel from Bitfarms. He said the mining metrics himself, profitability, revenue have never been stronger. What do you make of this chart here, Anthony, and where these companies are trading as a whole or as a sector?
Yeah, I mean, the thing that stood out for me is if you look down at sort of where Hive is there at 282 million, and then look at the next miner below them, which is Core Scientific at 643. There's a gap there of $350 million in terms of size. So, we talked about this before. There's sort of like has been a gap forming. If you go back 3 years ago, there was very little difference between the likes of Hive, Bitfarms, Argo Blockchain, Mara and Riot before the run. In fact, actually, Hive were probably one of the most valuable companies out there in early 2021 because they've been a miner longer than everybody else. So, that gap's forming. If you look at the miners in the bottom half then of that table, they've all sort of like got access to capital, and they're using it through the at-the-market offerings there. So, with the likes of Bitfarms have got an at-the-market offering. IREN, Wolf have. Bitdeer have just announced a big one, 150 million shares. Hut haven't got one at the moment. Obviously, they've got a merged company, so we'll probably see something come through from them. And it doesn't mean that the company has to use the ATM, but having one in place gives them that flexibility. And then the bottom four have all got significant ATMs in place, and they're just getting bigger and bigger. So the challenge is for some of these smaller miners where the valuations are ridiculously low for what hash rate they've got. So even if you said, if we looked at take Soluna, we know Soluna's got, not far, probably 0.8 of an exahash in terms of self-mining, 1.5 exahash, 1.6 exahash in terms of hosted mining. And it's got a market cap there of about 7 million. And so even if you turn around and said, well, it's hosting business, if you looked at that from a margin perspective and said, let's take the self-mine to 1 exahash. And because you normally say hosting would bring you in maybe 20% or 25% of self-mining margins. So that takes them to say 1 exahash there at 7 million. And then you've got, say, compare it to any one of them. Cypher have got 7.6 exahash, and they're at 1.3 billion. So if Soluna was to increase its hash rate 7-fold, the market cap at the moment is ridiculously small.
So why is that, Anthony? Because it's a very astute observation, right? And it goes back to your point around why would Marathon buy one of these companies when there's such a premium baked into a lot of these organizations? Is it just an uncertainty around like their balance sheet for some of these small miners, or is it just the fact that they don't have the visibility? Or
some of them have got really good metrics on the balance sheet. So the price to book metric, which looks at how much of if you're investing in that company, how much of your dollar invested gives you a dollar in assets, net assets. And so we've talked about at the moment the companies that are sort of like you get a dollar for a dollar. Would be close. Would be IREN would be close to that figure. Hut 8 would be close to that figure. Riot were close to that figure. They've had a bit of the last few weeks has been a really couple of good weeks for Riot Platforms. They've bounced off that $8 low, and they're at $12 at the moment. So that's like a 50% rise in share price in the last few weeks. But when it was down at $8, it was actually like literally a dollar for a dollar. And then you go, you look at sort of like CleanSpark and Marathon, and you're into sort of like $3-4 for every dollar of assets. So, but as the question that came up before, which sort of metrics would use? You'd use all of them to sort of like one metric on its own in isolation doesn't just give you the whole picture. you need to look at, valuations in terms of what's been put there. So, price of sales, price over book, and market cap over excess. I use two of those in my analysis. I use the price book and market cap, or I use the enterprise value over excess, because enterprise value takes it a stage further. It compares the amount of debt and cash and Bitcoin that a company has on the balance sheet. So you get sort of like a more comparison metric when you do that. Market capitalization can be vastly different for companies, because it takes into account what, it doesn't take into account how much debt and how much cash there is on the balance sheet, but the enterprise value does. But then you'd also look at sort of like what price they're paying for energy, what price their operating costs are. So you need to look at probably 12, 13 metrics before you start really understanding which ones are the tend to come really high in all those metrics to see where the value is. So never take one metric on its own in isolation. These are good valuation metrics, but you also need to look at the profitability of the company. It's no use having great metrics there, but if the company's making $200 million loss every year, and that's not going to be sustainable. So you need to look at who's got the cheap energy, who's not paying exorbitant staffing costs to themselves, and some miners do, some miners don't. Profits, we'll start seeing the results come out now for the first quarter. That first quarter, I would say all those miners on there, if they're not producing green results in the first quarter, then there is a problem, because the Bitcoin price really rallied in that 3 months, and all those miners should be showing good profits. And the ones with a hodl will have significant profits, because they'll have the valuation of these assets, the increased valuation of the Bitcoin or Ethereum that's on their balance sheets. So that's that increased valuation is taken to the income statement as well as being on the balance sheet. It's an actual it's not taxable, because there's no it's not taxable profit, because it's only taxable when you actually sell the Bitcoin and there's a capital gain to it, that there's a gain, and you actually get it's only at point of sale. So it's unrealized profits, but unrealized profits will be included in their income statement, so it'll be part of the number.
Sure. Well, and let's get into some of that, because you're right, Anthony. Q1 should be a blockbuster quarter for most of these companies. It's going to be hard to imagine Q2, 3, 4 getting better than Q1 unless the price of Bitcoin really does start to go on a move. So we're at 115 viewers. You guys smash the like button. We're going to get into the Q&A section here. We'll start with some of the smaller miners. So get your questions in about the mid and the large caps here, you guys. First one, Anthony, just because we were talking about them on the last slide as well, Griffin Mining. So you speak about aggressive growth plans. We talked about Marathon moving up to 50 exahash in the intro. Griffin has a very aggressive growth target from essentially 1 to 10 exahash this year, as laid out by Rob Chang. He talked about that on our interview. Just a side note on interviews, you guys, we've now scheduled 9 of the CEOs on for their Q1 results. Really starting those first couple weeks of May, we're going to try and do one every single day for you. So make sure you get us our questions. But Griffin, Anthony, what do you think about them? Do they have the ability to get to 10 exahash this year?
On their own? No, they won't get, not on their own. But if you look at deeper from Rob's thoughts, it's possible with a number of things falling in place. So it might be a case of where they can merge with another company. So you have some of these smaller miners, might think, actually, if we merge together, we can reduce some of the sort of like the double costs that some of these companies. Bear in mind, Griffin Mining don't have a lot of costs, because they take asset light to a whole new level. There's only 3 employees in the company. 3 people,
yeah.
So, but no, to get to 10 exahash, I've just articulated how much you'd need to, for a company to get to 7 exahash, and we were looking at 180 million. And to get to 10 exahash, you can, add another 50, 60 million on top of that there. So they can't do it on their own, but they could sort of like look at some way of doing it organically. And, they might look at some of these, some of the non-public miners who are out there. Maybe there's a potential merger with those, and it benefits Griffin, benefits the miner. That Griffin are listed on the NASDAQ now. So, there's an opportunity there. For a company to go listed, it's an enormous amount of money. It could cost, heading up towards $5-10 million in fees just to get listed, and all the due diligence you've got to do before that, all the man hours that you've got to put in. It's not taken lightly. It's took Griffin 2 years to list from when they sort of like started talking about we're going to be listed shortly. So it's a 2-year process, and they were able to do it in a slightly different way, which didn't mean they had to spend an enormous amount of costs. But these miners, some of these smaller miners wouldn't have $10 million there. It's a real challenge. And so, some of these smaller miners are on like the Canadian exchanges there, and then the majority of those are on the NASDAQ. So, NASDAQ gives you ability to get more revenues. The only thing I'll say is some of the smaller miners, bear in mind, go back 3 years ago, all these miners were small. Marathon and Riot were small 3 years ago. A miner can grow. We talked about IREN last year. So IREN were 1.3 exahash in January 2023, and they're 8, literally 15 months later. Yeah. So, you can, but there was, Marathon had $50 million in cash reserves when they had 1.3 exahash. They handed those machines back to NYDIG. They defaulted on the actual loan because it just made no sense for them to carry on with it. Why would you pay a loan of $103 million, whatever it was, and your machine's only worth, 65 million? Just hand them back and start again, and there's no debt then. So, but I believe that's still got some issues with that. They're going through some litigation with that at the moment, so they're not going to comment too much on that. But we'll find out in a couple of months' time where that position is. It's not gone away totally. Sure. But going back to Griffin. Things can happen. Rob's an expert in this area. He was the CFO of Riot Platforms, so he's not just coming here, from the outside. He was also on the desks of them, the valuable metals like the gold and the valuable. He's probably one of the most experienced people in the space in terms of how to look at these companies from a valuation perspective, from an operational perspective. He's done it. He's done his homework. He's been on the desk. He's done this work before. Then he's part of Riot, and now he's been part of Griffin for a number of years. Going through.
What I thought was interesting there, Anthony, in our interview, he was talking about that experience in the traditional precious metal mining sector, and he made a really strong point, I thought, for not hodling and why you would want to sell every day, and related it to the silver gold miners and the way those businesses work. So I'm an advocate for hodl. I'm a Bitcoin maxi. I think there's a lot of upside there, but he made a very valid point on the other side that I had to respect during that interview. So it'll be a stretch for sure, Anthony.
Paul Prager and Dan Roberts equally have the same. I think Dan articulates it really well. He puts that point across. But bear in mind, they're doing these Q&A sessions and interviews on a regular basis. So they're very polished now. But they put across a really good argument. I'm neither here nor there. I'm not. You had the likes of Hut who for a few years wouldn't sell a Bitcoin, and they put a strong argument for not doing it. And it's great when the price goes up. As soon as it turns, and you don't, some miners were buying and selling Bitcoin because the price changed. So miners have made mistakes before. It's still an early learning curve for a lot of the miners. As I say, the oldest miner is 6 years old. Most of these miners are 3 years old or less. So, there's still lots to be learned.
There definitely is. Now, moving to Bitfarms, this is one that we talked about recently this week in terms of some of the challenges with the CEO hunt, the potential ban in Paraguay, which seems to be kind of squashed now. But you just talked to Ben today, actually, Anthony. He's over in your neck of the woods for the AIM conference. So maybe you want to just mention kind of the plan with Ben in terms of the interview next week and what you think of Bitfarms right now.
I've been a fan of Bitfarms for a few years. They from a production point of view, they get the most out of their machines, and we've said this before. Only Hive Digital comes close in generating Bitcoin from mining machines. Ben's one of the most experienced operators out there. He was mining Bitcoin before any one of these people were involved in Bitcoin. He was there at the very start. He was doing it on his own. and he's been in the business now for a long time, so he brings a lot of experience. He's not that old, actually, Ben. He's one of the youngest, senior team, managers in the companies. And if Ben was ever to leave Bitfarms, I'm sure there'd be like 13 or 14 offers on the table for him to go to their companies. He's well regarded in the space.
Hey, quick question there, Anthony, on that. You mentioned earlier Bitfarms efficiency in relation to Marathon buying Bitfarms and that discussion from Rex Finance. You mentioned Bitfarms efficiencies north of 30. How do they manage to be the most efficient or get the most out of their machines if they've got the least efficient fleet?
There's so many variables to mining. It's not, I don't think it's, people think it's plug in and just do it, but it's all about, using the right software, making sure you're running them at the right levels. There's underclocking is as important as overclocking a machine. So running it, with less power sometimes benefits more. Also, maybe some of the areas that they're in, there's been less curtailment in those areas than some of the other miners have had to go through. So if you look at the Texas miners, all the miners that are in Texas, they're pretty much curtailing every day. In fact, one of the actual, the 4CP program in Texas, which most of the miners sign up to because it's a beneficial program, you get significant benefits by doing it. And part of that program is you have to curtail 3 or 4 times a day. Not for excessive long, but it's to make sure the domestic supply of energy isn't interrupted for households. Make sure they can have breakfast in the morning, when they get home after work in the evening, things like that. So there are times of the day when there's when the toaster or the ironing board gets switched on and there's a lot of power required. These mining companies, are told in advance and the window that they have to switch off for. But Bitfarms aren't in those locations. They're in Canada. They're in Paraguay now. They're where they've got hydropower. They're in Argentina, and so they're in I think 10, 11 different locations, and maybe it's the curtailment. They do get curtailment because in their updates they'll put that there, but they just seem every month to do really well. And Hive another one where their setups in Canada, Iceland, Sweden. Well, the common denominator there is cold countries. So, some of these miners benefit from that. We've also had, if you look in recent months, the likes of DMG Blockchain, SATO technology have crept up the rankings. And where are they based? They're based in Canada. So some of the Canadian miners, benefit because it's generally a bit cooler. You're trying to mine in weathers when it's 50 degrees Celsius outside. It's like 100 degrees Fahrenheit or whatever. It's hard because these mining machines get hot as well. So you've got to not only try and get the miners cooler, you've got to compete with the weather conditions. Yeah. And so that's the challenge. So so there is some reasoning behind why Bitfarms produces more with sort of like less efficient miners, but they're probably just it's managing these sites, and they probably just do it a little bit better than others.
Well, Anthony, what I was going to say, I don't remember if it was Sheldon from DMG or Jason at Riot, but they were telling me that the temperature starts to impact these rigs at like 15 degrees Celsius. So it doesn't even take you don't need to be in Dubai or Texas or somewhere. Even regular summer temperatures, most of the world will have an impact. I also wanted to get your take, Anthony, because obviously Bitfarms and Ben have been able to really squeeze the most out of their current fleet. But they've also been testing the T21, and Ben was saying that was performing exceptionally well based on their testing. So in my mind, not only do they have a lot of growth this year, but they've also proven the ability to really optimize their machines, overclock them. And the nice thing with the T21 is there's no warranty clause if you want to run it in that overclocking mode. So what's your take there?
Yeah, I mean, you came on the podcast, he said they were getting 25-30% more than the box stated, so they were really pleased with that there. So they've gone predominantly for they have ordered S21 as well, but they've got such a big order in place to get them to that 21 exahash by the end of the year that they've predominantly gone for the T21. So most of the orders are T21 because they've tested them. And all these mining companies get the ability to test new models when they come out. And then from that testing, a lot of them then can place the orders. I'm not saying it happens all the time, but generally, if you're going to spend, hundreds of millions of dollars on mining machines, you want to test them first. When we buy a motor car, we want to test drive it before we buy it. Generally, if you're going to spend, 30,000-40,000 pounds or dollars on a car, you don't just want to go into a showroom and just give them money. You want to make sure it fits. And so, all these companies will do that. These S21s would be shared around a lot of companies for testing. Because at the end of the day, Bitmain will know they've got a good machine out in the market, efficient machine, and they'll get the rewards for that. And you just look at the size of the orders that are coming through in 2023, 2024 compared to what was in 2022, 2021. Significant jumps in size of orders, not in size of the cost of the order, because mining machines in 2021 and 2022 were significantly higher. So S19s, which is like literally half the efficiency of the T and the S21, were costing twice the price of the T and S21. So a machine that was half the efficiency was costing you twice as much. I remember, I think it was Riot purchased 42,000 S19s, and Marathon might have purchased 30,000 S19s back in 2021, middle of the year, and they were paying, about $30 a terahash, and now we're getting these mining execs coming on saying we've paid 14, we've paid 15, we've paid 16, we had to pay $16. This is half the amount, but you're getting a machine that's twice the efficiency, or twice, maybe more than twice. So you've got effectively 4x beneficial position.
And we saw prices much higher than that for machines, and that's really why CleanSpark.
I'm talking the machines that when Marathon were ordering 30,000 and Riot were ordering 42,000, they were getting a big discount. Yeah. So some of these other mining companies were paying $50 a terahash. Some were paying 80. So Stronghold Mining, Argo Blockchain were in some of their orders were between $80 and $90 a terahash back in 2021.
That was the number in my mind. Yeah. $80.
Absolutely.
Yeah. And that's why CleanSpark is in such a good position now, right? They were building right when the rig prices were bottoming out and cheap, and it just was a great timing situation. But CleanSpark's shown some pretty good intuition about their hodl and when to buy, when to sell. They definitely have a good feel for that. Now, get your questions in here, you guys. We'll start going through each one of these companies one by one. Hit the like button, you guys. Make sure you throw a comment in here. Let us know where you're from, where you're watching from today, what you got planned for the weekend, your biggest position in the mining sector right now. One that we talk about quite a bit on the channel, Anthony, Bit Digital, the next phase of HPC. We've seen this initial contract be upsized from 25 to 50 to $100 million run rate. They're now starting to prove that with their monthly revenue in the neighborhood of about 4 to 4.5 million. So on pace for that 50 million annualized. But this is just really scratching the surface, right? And Sam's been on the show saying they haven't even started any outbound marketing. This has all been inbound activity. That was confirmed again by IREN on Monday when we talked to their lead of AI and operations, saying they haven't even started doing marketing for this stuff. There's so much demand for HPC, and there was really a lot of benefits from these hyperscalers. If you look at alternatives like the miners in terms of ramp up time, pricing, flexibility, what's your take on HPC, Anthony? This is something that's really become a mainstay in the mining network right now.
Yeah, I mean, there was a lot of angst about it when we knew that the likes of Hut and Hive had to go down HPC because they had thousands and thousands of GPUs from their Ethereum mining days, and that was sort of like the natural way to utilize some of those GPUs into HPC. And so it wasn't really on anyone else's radar to come out, and we started seeing a number of miners saying they're interested in moving into the space. It was just another revenue stream. And then you had like the pure Bitcoiners were saying, no, this is just this is just noise. It's not a real business. It's just like, it's just distracting them from maybe poor Bitcoin mining performance. But you got to look at what Bit Digital did. They didn't announce anything until they got the client. So, they announced what their revenues were, and they were the first to do that, and it was 35 million, and they had a client for 3 years. They've done it, in a way. They've leased the facility in Iceland. They've now leased the machines. I think they bought machines initially, but they've now done a lease back on the machines there. So the machines are leased, the GPUs. And from what Sam said, and if you think the increase in contract went from 35 to 50 million in very quick time, so they've got an annualized contract now. And we know it's annualized at 50 million because we can see the revenues every month come on the update. So Bit Digital, again, not a lot of the other miners are putting anything else other than the self-mining on there, but they decided, and I think, rightly so, if you've got a 50 million annualized contract in HPC and you're a mining company that only mined 43 million Bitcoin in the whole of 2023, why not put it in your update? It's a significant number. That number by the end of the year will be annualized at 100 million. And what we'll find out in the middle of May, when they do their earnings update, is we'll know exactly what the margins are, because I asked in a recent Spaces meeting with Cameron, one of the senior managers in the company, and asked him, will you be showing the breakdown by business expense there, so showing your cost per different business, segmented analysis, we call it in accounting terms. And he said, yeah, we'll do that. So we'll know straight away how much costs are going against that revenue. Now, when Sam was on the last podcast we did a few weeks ago, he was able to, we asked him the question, say, you said the margins are good. Put it into, Bitcoin terms, what the margins look like. And he says, well, if the Bitcoin price is at 100,000 today, I'd still be getting better margins with my HPC business than the Bitcoin mining business. And they've got close to 3 exahash at the moment. They're going to go to 6 by the end of the year. So that'll be interesting to see when them earnings come out. And bear in mind, we've seen the Bitcoin price come off a little bit since its high of 73,000, and yes, it's been a bit volatile. And we might see a rise next week when the Hong Kong ETF starts on the 30th. But the thing about HPC is it doesn't worry about what the Bitcoin price is. It's revenues in a contract. So we've got a contract for 3 years, and it's annualized at 50 million a year. Every month, 4.3 million is going into your monthly position, and he's putting that number in there. So
let me ask you then, Anthony, based on that, if the mining margins, even at $100,000 Bitcoin, would favor HPC, it's recurring revenue, it's independent of Bitcoin price and halving. Do you think we're going to start to see a lot of these companies switch over straight away from Bitcoin mining to AI HPC? And do you think that's part of the thinking behind Marathon going the vertical integration, is just to open the doors down the road for those potential opportunities?
I think there's always I think that the key thing about HPC and the support of the AI industry, it's only going to get more power intensive. So you're going to need these data centers, more power, more GPUs to provide. We go back 12 months ago, and most people on this call now, most people around the world, you mentioned AI and stuff like that, they wouldn't really know what you were talking about. But now people use some of these software packages. I've used ChatGPT or Copilot. Ask a question in there, and it searches and puts it into a format that you'd like to see it in, like that. If you want to do if you're working for a company, you want to do a health and safety document, you can type that into these AI software packages, and as long as you put the question in a certain way, it will give you the answer you want. You can do contracts in there. There'll always be a disclaimer, do check it. But I'd say something, the manpower it would save in putting that together. If you imagine you're at work and and the boss comes in and says, I want a health and safety, I want the policy updated, you've got a week to do it. You can go and chat GPT or do it in about 10 minutes.
Yeah, exactly.
And then you've got to go through and read. I'm not saying just, but go through, read it, check, like that. But believe you me, it's like having 3 or 4 people working for you. It helps that way. And so, we're seeing, I go back to the analogy. The first iPhone I bought was the iPhone 3, and and so once I got the iPhone 3, it was like, why have I never had one before? You know, it's only till the adoption hits. So we're not, you know, there was 100 million people in the first 5 months had accessed ChatGPT. Massive numbers in terms of adoption. You know, and it's only going to get bigger. You know, I mean, you know, it just be part of the normal day. You know, day of
Well,
life.
even on emails now, Anthony, right? It'll start predicting your title. It'll say, "Hi, Anthony," or whatever.
Exactly.
So it's creeping into
I
regular life.
want to switch it off sometimes because it does it too much. It's like every word it's trying to put the next word in for you. Sometimes you don't want to go down that route, you know. So, but yeah, it's part and parcel of life. And these companies, I think they realise that, and I think, you know, if you can get, I mean, the one big thing that was turning mining companies, you know, maybe not going in full HPC is because the tier 3 environmental requirements for these facilities are not like the bloody containers that some of the miners are using as mining facilities. I mean, we've got some miners who do really great facilities. I don't want to put them all in that, but you know, I've seen photographs of some of them, and they're like, you know, they're like containers off a ship, like, you know, literally, you know, with shelving put in there and mining machines put in there, and maybe a fan or something like that, and away you go. And if you're in an area where it doesn't get, you know, 50 degrees, maybe that works. So maybe in Canada you can get away with some of that. But what some of these companies that have really good facilities to find out is the gap isn't as big as everyone was expecting. I mean, these numbers that were bounced around a year ago was if you were going to build a facility for Bitcoin mining, you'd need, you know, $1 million to build it. And if you wanted a facility, the same size facility for HPC, you'd need $10 million to build it. It was a 10x on the Bitcoin mining. So, you know, and then we're going to think about then is what's the returns like? How long is it going to take for me to get my money back, my investment back? So I'm going to invest 10 million in HPC. How long is it going to take me 2-3 years? And that's how these companies work. It's all about return on investment. So when they're buying these mining machines, building these facilities, it's about how long when can I get my money back? It's how quickly. And but what you found out is the likes of IREN, the likes of some of the other miners, they're not having to spend 10x. They can get these facilities. You know, there's a difference in price. And actually, I think from what IREN is saying, and was on the podcast the other day, is, you know, the gap's smaller than that. They're building really good mine facilities, so it's not a, you know. And what they've also got is they've managed to agree with their customer that, you know, if you don't get the Rolls-Royce facility, but you get a facility that will do what you require at sort of like maybe, I mean, when we talk HPC, the uptime for HPC is standard at 99.999%. It's the 5 nines. But what you might, as a Bitcoin miner, might say, we can guarantee 90% or 92%. And you don't pay the same revenues that you would pay if we had 99.999. So you get a bit of a discount on the actual what it costs you to pay for that contract. So it appeals then, you know, if you're requiring it for training rather than for like ChatGPT where you need uptime all the time, because if customers are paying for ChatGPT, they want access to it 24/7.
Yeah,
you know, they want access to it all the time. But if you're doing something like training or development that way, and you don't need it 24/7, you might need a sort of like a service that isn't as, you know, it's not the Rolls-Royce standard. And I use the Rolls-Royce.
It sounded like there was quite an audience for that. It's not mission critical stuff. It just requires strong computing abilities. But like you say, if it's training or something, maybe you can choose when you do it. Now, another question here, Anthony. We did talk about Marathon in the intro. You guys talked about kind of some of our expectations around the exahash growth. Obviously, the FASB accounting rules are a huge plus for Marathon, with their HODL. We got another question here from Alim Asar, Anthony, talking about upcoming earnings reports for Q1. So we've actually booked in 9 so far CEOs to come on talk about their Q1 results. We're expecting Q1 to be blockbuster, Anthony, for a number of reasons. What are those reasons? Why do we think Q1 is going to really set the bar for this year?
Yeah, I mean, Bitcoin price is the major reason. So if you look at the last quarter, the Bitcoin price was 42,000 when we started the quarter. and finished at 71,000 when we at the end of March the 31st. So if you think about those companies that hodl and didn't sell all their production during that period, they're going to have quite a nice benefit from that even before you start looking at what revenues they achieve. So, you know, if they had, say they had 1,000 Bitcoin in December and the valuation was 42,000, that's like $42 million in terms of the Bitcoin value at the 1st of January. But the value of that Bitcoin at the 31st of March, the end of the quarter, if they hadn't added any to it and not sold any, so they still had that 1,000 Bitcoin, would be 71 million. So there's a difference in valuation there of 29 million, and that 29 million is an unrealized profit. It goes.
That's
on
what
the
I was
balance.
going to ask. Does that go into revenue or just
It goes into the income statement as an unrealized gain on that stage. Yeah, it goes in there. You don't get taxed on it. I've already explained that because you've not sold any of the Bitcoin. It only becomes taxable when you sell it, and then it becomes realized gain. Then, so it's unrealized because you've not done anything with it. You've created the Bitcoin, and it's increased in value. So you show the true value, and you're allowed to book that difference in value to the income statement as well. Once you sell it, you then have to declare the gain that you had, and that becomes then the taxable part of it then. So, you know, I mean, Bitcoin price change every day, so there's no way you can start, you know, doing that. All these other companies that sell on a daily basis, they will be booking revenues on a daily basis. So when you look at, say, go and look at an IREN report for the month, and it will tell you how much revenues for that month they earn, because they sell on a daily basis. So they'll give you the amount of Bitcoin that they produced in, say, March, and say it was, I don't know, 370 Bitcoin, and they'll tell you the price, the average price that they achieve for that Bitcoin there, and it'll be lower than the current price because they'll have been selling it on a daily basis. If the Bitcoin price rises, it's like effectively get like an average, but it's booked on a daily basis. That's how the revenues are achieved there. Now, that's the unrealized gain. So all those companies that hodl are going to have significant gains for that period, and some are going to have, you know, if it's going to be 29 million for 1,000 Bitcoin, what's going to be if you've got 17,000 Bitcoin on your in your hodl, like Marathon Digital? Then you look at the likes of Hut 8 have got 9,000 Bitcoin. Then you've got Riot Platforms. Then you've got CleanSpark with 5,000 Bitcoin. So all those miners, even with the likes of Hive Digital, Hive have got over 2,300 Bitcoin. And then you go look at likes of DMG. Now DMG, they were mining profitably without the increase. They small company, and a lot of these small companies mine profitably. You know, there's a net profit. You know, most of the big companies didn't make a profit in 2023, and Marathon did, only because they reduced their loan. They got a benefit from that, and so, you know, if you took that away from it, they'd have made a loss in 2023, like all the other big miners. But some of the smaller miners actually were able to do things a little bit better, but they do it on a small scale, so they've got, you know, probably maybe less overheads. And just, you know, really manage it. But some of these companies, you know, SATO had a profit in 2023. DMG had a profit in 2023. So in 2024, even some of these small, you'll see that, you know, even better, because both of those companies have got a hodl. So SATO got, I think, 60 Bitcoin. It's only a small amount, but hey, 60 Bitcoin at 60,000. That's 3.6 million.
Yeah, it adds up.
It's, you know, it was only 42,000, so it was, you know, and they had less Bitcoin in January than they've got now. So all these, I think, you know, majority of companies, even the companies that don't hodl, because the Bitcoin price has been so good to them, you'll see the benefits of that. They should all be having really good margins for those 3 months, all of them, even the likes of Argo Blockchain.
Now, question for you, Anthony. And I see a couple super chats coming through. Thanks so much, you guys. We really appreciate it. You're talking about profitability. So some of the smaller miners managed to eke out a profitable year in 2023. Q1, we widely expect to be profitable for most of the miners we cover. It really should be. What do you think about Q2 onward, Anthony? Is this going to be a situation where Q1's a little bit almost too good to be true, and then reality sets in type of thing?
Q2, again, it all depends on the Bitcoin price. So the Bitcoin price is better than people were talking about 3 months ago. So people were saying, it could drop after the halving. It hasn't really dropped that much since the halving. Also depends on the global hash rate. So that will affect production. So mining companies are getting 22-23% less production now than they were achieving at the end of last year. So, but the Bitcoin price is better. Recent big analyst companies like Cantor Fitzgerald have put out their views on the mining companies, and it looks like the majority are okay, actually, even post-halving. So we really need to know what the Bitcoin price is going to do over these next 2 months. We're at the end of April on Tuesday, so we've got another 2 months of quarter two, and I'm assuming that Gary's saying quarter two as in April, May, June, because quarter two is different for every miner. Some miners use calendar years. Some
I'm
miners
sure it's calendar. Most of them
it's
are
all different. So quarter two it's just, I always say, is like the second quarter of the financial of that year, rather than it could be quarter three for some miners. Could be finals for some miners. I think for Iris Energy, it'd be like the end of the year. I think their end of the year is June. So, but I think majority of them will be profitable. And the reason I say that is some of these companies were profitable in 2023 when the Bitcoin price was half of what it is at the moment. So bear in mind, price and rewards less. But some of them will struggle. So if they, and the other factor is, some have got access to cheap energy. A lot of them are changing miners, so becoming more efficient. That benefits them. It's whether they all can sort of follow that route there. Is electricity prices getting still getting more expensive? Are they able to replace some of the older machines with these more efficient machines? That'll keep the price down. So there'll be a gap. One thing Cantor Fitzgerald looked at when they produced their report is they took into account all the other businesses. So what you will see is, and we've just discussed the likes of, say, Bit Digital. That'd be a perfect example. So Bit Digital, maybe their Bitcoin at the moment, with the Bitcoin price at 60,000, it's close to where it needs to be. But they've got this other revenue stream that helps them get through these challenging times. And all the analysts are saying, a number of months past the halving date, Bitcoin price will start to rally. We'll go into that next bear cycle. So a lot of them are thinking we've got maybe another 15, 16, 18 months of upward trend before we go through that bear cycle, so we can benefit. So I would say, I don't think these miners won't be switching off in this quarter. Some of them will be borderline, but it'll just be like 2023. It'll be like, effectively, it was a challenge, but we got through it. And those with HPC, of which about 75-80% of the miners are going into HPC, that's a nice little revenue stream to help them through this period.
Yeah, I think a lot of them really learned their lesson about having all their eggs in one basket. Now, Bob, you asked a question about the miner interviews we have coming up for Q1. I'll post this in our community chat or on Twitter as well, but just for reference here, you guys, kicking off on Monday, May 6th with Griffin. So these will all be with CEOs. Rob Cheng from Griffin. Tuesday the 7th, we've got Riot. The 8th, we've got DMG. 9th, we've got Cores. Then it's a weekend. Then Bitfarms on the 13th. Anthony's actually going to be meeting Ben in London at the AIM Summit. We're going to try and do something kind of live. I'll broadcast in, obviously, and coordinate that. We've got Hut 8 and Bitdeer on the 15th. So we'll be back-to-back interviews there. Soluna on the 16th. And then our good friends TeraWulf on the 17th. The last one we currently have scheduled is Bit Digital on the 21st, you guys. So pretty much every weekday of May at this point, you'll be getting a CEO interview talking about these phenomenal Q1s. And as always, you guys, all the questions, unless we don't get any, we get them from you guys. And if we don't get any, then we fill them in. So if you want any specific questions, don't ask, why is your share price down 20%? Or why don't you have the same market cap as Mara or something like that? But any respectful and obviously appropriate questions, we're happy to throw in there. Should be a really interesting month. We've got the podcast going. on Spotify, Amazon, Apple Music now, Anthony. So we'll just pump out these interviews and you guys can listen to them throughout the month to see what you think. Now, Hive interview. Sorry, Rohit, I just see your question there. Hive, we're working on right now, buddy. We'll get you a schedule. We'll probably produce a monthly schedule here showing what each one of these are and our release dates. Hive is another interesting one, though, Anthony. I know we chatted about them a little bit yesterday. What are you expecting from their Q1? They've obviously got a well-diversified business. They've got the benefit of HODL. However, they're based in Canada here. So we're not 100% sure on how that FASB impacts, I guess, the Canadian companies at this point, depending if which accounting treatment they're on, I suppose.
Yeah, I mean, as well as meeting Ben on Monday and Tuesday, there's about 9 mining companies going to the AIM Summit in London. So I'll be rubbing shoulders with all those, with the likes of Hut, Hive, Marathon are there, Riot are there, Bit Digital are there, Bitdeer are there. Literally, most of the ones that we cover. CleanSpark are there. So Matt and Zach are both at the conference. And so it's a really good conference to go to. That was my first ever conference 2 years ago. And I was sat in the audience at the conference and, just taking note of the speakers coming on the stage. And I was sat, 2 seats away from Sue Ennis from Hut 8 and Jamie Leverton, who was the CEO at the time. And Frank Holmes was giving his presentation on the stage. He was doing a 15-minute everything about Hive Digital. And all of a sudden, one of my slides appeared on the stage. It's like he used one of my monthly slides in his presentation pack. So it's nice to get some credibility for the stuff we do. Hive have been, in terms of production, I mentioned it earlier. I mean, them and Bitfarms are the two over the last 3 years in terms of mining with what you've got. They've not. No one can compete with those two, to be honest. They've been pretty much neck and neck over the last 3 years. It's either or in first or second place most months. I think last year it was, I think Bitfarms had 6 or 7 of the months and Hive had 3 or 4 of the months, in top spot. So, and they were 1 and 2 by the end of the year. So, and there's a gap then between them. And you've got IREN and likes of SATO came in 4th and then CleanSpark were 5th. So, but those two are very consistent. One thing that Hive have been doing is replacing a lot of the old mining machines they've got. So, they haven't been growing as quickly maybe as some of the shareholders would have hoped to. So I think they reached a high of 4.7 exahash at the end of March. And, who knows, that could be, over 5 exahash by the end of April when we get the update out in that first week. So, but they've got a target of 8 by the end of the year. They've also been looking in the HPC space longer than every other miner because they had the GPUs and they wanted to look at the best way of utilizing those GPUs. And some of those GPUs were fairly new when Ethereum mining stopped. They were still buying GPUs literally up to about, I think, like June and the Ethereum mining stopped in September. So they'd have had a lot of, fairly new GPUs on their books. And so they started slowly. It was like, we want to get $1 million of annualized revenue, and we want a target of this here. Well, at the moment now, I think they're at about 10 million annualized revenue. So it's not quite as good as where Bit Digital are. But if you look at where the rest of the miners are, I think IREN aren't that much further ahead than that. I think theirs is like 11 to 14 million of revenues at the moment, but growing because they're bringing in more machines. But if Aidan can, and Aidan's, a real technical whiz in this space here. He's got the right, the background there. He's the CEO and the president. And then you've got, Frank, who's got all that experience in the gold markets. He was there when Hive started. So he's got a massive experience. And, you listen to Frank talk. I've listened to, umpteen of his presentations. I've been at conferences. He does speak a lot at the conferences as a key speaker. They do things differently. So one thing they do is they try and keep the costs down. They haven't got the lowest energy price in terms of comparison to peers. But when you start looking at their operating costs, so this is like labor, the G&A costs, legal, all them other operating costs that you'd incur. Look at that as a percentage of revenues compared to some of the other miners, and it's significantly less. So they do manage those costs that you can't really manage energy, because the energy is your contracted price. So if you want to mine Bitcoin, that's the price you're going to pay for the energy, how many Bitcoin you mine, you're able to do the hash rate you've got. But what you can control is you can control the operating cost, because you can determine how much you pay everybody. Are you going to let people fly business class, or is it going to be economy? Are you going to keep the hotel expenses? Are you going to keep traveling down to a minimum? They're costs that are discretionary that you can keep control over. Are we going to sponsor, 10 conferences this year? Are we going to sponsor 3 conferences? Are we going to change the level of sponsorship? It's all about, managing the costs that are manageable. Energy.
Hey, Anthony, just to jump in, I know you're talking about Hive and their costs, but we also heard a very similar tune from Asher in terms of his new outlook for the company. So we can maybe talk about that next here. Yeah,
it's a mirror. So they, Asher came on the podcast and said, he's implemented cost management structures in place there at Hut. So now they have a limit to what they can pay for a daily rate for a hotel. So it makes them start looking at don't go in the most expensive ones. They can't fly by private jet to any conferences. They've got to go by economy. And so, if the CEO's setting that level and doing it himself, then the rest of the troops should follow in as well. And they have to. Some of these miners have to keep the costs down there, because they might not all have access to energy like the likes of TeraWulf have got, or the likes of Cypher have got, or the likes of, say, Riot with their energy strategy in Texas, where they benefit from that. And I think Jason mentioned that 2023 they were paying an average of about 2.2 cents a kilowatt hour, which is lower than pretty much every miner. Yes, the Nautilus site for TeraWulf is only 2 cents, but it's 50 megawatts. They've got probably 3 times that amount at Lake Mariner, where they're paying more of a market rate. But the blended rate's just over 3.5 cents. So fantastic rates. Hut and Hive probably are in the sort of like 4 to 5 cent bracket. And then you've got some of the hosted companies, add another couple of cents onto that. So the likes of Marathon and Bit Digital will be paying, 6.5, maybe Griffin mining 6.5 cents a kilowatt hour, which includes a hosting fee. But then Rob will turn around and say, from the hosting element, I've got 3 staff. So all those other costs, they're not there. That is my cost, 6.5, plus the three people that work in an office, wherever where the office location is. It's not, So a lot of these miners are having to do that and do it more now as we've gone through the halving. Just keep control over the costs that you can. And then make the decision on whether you can mine Bitcoin at the maximum uptime that to make sure you're bringing in the right margins.
Yeah, we got a fellow countryman from the UK here, Anthony, just saying hi to you. Sounds like you need some WD-40 on that chair over there, Anthony. We're getting a squeak on you.
Yeah. When you've been sat here for 2 hours.
I was going to say, no, we appreciate the commentary. This has been a good one, you guys. We were only planning on going an hour. We've just about run an hour and a half. We were able to get through the entire thing. Knock on wood, Anthony, no technical difficulties. Really good stream, you guys. We kicked off talking about the news from Marathon, their expansion to 50 exahash, what we think that means, some of the market cap differences we're starting to see in this sector, and then obviously the impacts of the transaction fees, the runes. We did forget to talk about that in terms of Q2 profitability, Anthony. All of the additional transaction fees is obviously going to be super beneficial and quite an upside surprise for a lot of these companies. So you guys, if you're still here, thanks for tuning in. We're going to try and do a weekend and a weekday live stream every week just to kind of cater to as many different schedules as possible. Make sure you hit the like button before you go, you guys. Throw us a comment in the chat. Let us know where you're from. Anthony, last question for you. Stanley Cup prediction. That's actually a hockey tournament we have here in North America. Different teams ice skating. Do you have any predictions there?
I don't. And the only thing about ice skating is Torval and Dean. They were like the gold medalists back in 1984 or something like that. No, ice hockey. I'd be doing it a discredit if I said it's not played in the UK. It is played, but it's like if you went down the list of sports in the UK, ice hockey wouldn't make probably the top 20. And same again with likes of basketball. We don't do American. I mean, and again, if you're doing a disservice, there are probably some American
football
no
teams. Stanley Cup prediction. I'll tell you guys, I'm in Calgary. I know the Flames are not going to be winning it, so I'll give you that prediction. Maybe we'll go into some football predictions down the road here, Anthony.
But yeah, football. Today, we're right at football. England are a decent football team, so we're all right there.
There you go. Oh, and we have an Avalanche fan here, so we'll end it with that one, you guys. Carl from Michigan, go Avalanche. So you guys, thanks so much for the stream today. We appreciate everybody's time. We'll be back next week, and make sure you get all the questions in for the CEO Q1 interviews. Anthony, I'll let you close it out today.
Yeah, no, I enjoyed today. Been a good meeting there. Any of the questions that we've missed, put them into the in the comments, and we'll try, Bryce and myself, try and come back and answer them, or we'll use those questions going into the next session as well. So we'll try and get answers to those. We're not trying to give out price predictions on stocks. We might look at which companies we feel from a value perspective have got ability to when you do comparisons. But there are sometimes reasons for why companies are valued. So we already mentioned during this podcast, you've got some miners that are literally value at book now. So you're literally getting dollar for share price, dollar for assets. But there's a reason why you're paying $4 or $3 for the likes of, say, CleanSpark or a Cypher or a Marathon, and there's a premium built into that, and it's because it's not about that company today, it's about that company in 12 months, 18 months, 2 years time. And so if I said to the people on this meeting now, tell me where you think CleanSpark are going to be hash rate by the end of 2025, and then tell me where some of the other miners are going to be better in 2025. That's what's being built into the price. The fact that the likelihood is some of the bigger miners are going to get there, and the challenge for some of the smaller miners is how do they get to grow in the current market now, where raising capital is a challenge for the smaller miners. I'm not saying it's impossible, but it's a challenge. Bitdeer just announced 150 million shares, like an ATM they can use now for over a period now to grow where they need to grow. They've got massive sites in Bhutan, in Norway that they're developing. They've just broke ground in Ohio, literally 2 months ago. And so, you need capital now to build these sites out, get the mining machines built, and they're going to build their own machines, but it still takes money to do that. And to get there, they've come out with I think they come out with a target of over 40 exahash by the end of next year. So to get there, you've got to do, and they've got an ability to do that now because they've been on the Nasdaq for a year. Once you've been on the Nasdaq for a year, you're allowed to apply for an at-the-market offering then to start selling shares to cover these sort of costs. So the question is how do the Griffins, how do the DMGs, how do some of the smaller miners, get that sort of growth in place to get where they need to be? And is it a case that some of those could actually, is merger and acquisition or joining of companies an opportunity for them to grow in that way rather than try and grow organically like some of the big miners? It's going to be interesting times over the next sort of 6 months as this pans out. But I remember in 2020, final point, I remember in 2022, sat next to Ben Gagnon in the AIM Summit in London, and we were talking about M&A activity in 2022 when the Bitcoin price was dropping, and it was dropping every week, going down in one direction. And a lot of the top people in this space were saying there's going to be loads of merger, and it never happened. It never really happened. I mean, we saw Core Scientific go into Chapter 11, Argo nearly going to Chapter 11. The only merger we've seen really is the Hut one, which was November last year. So there's been some one company I'm trying to Celsius went into Chapter 11, came out Chapter 11. So we're expecting far more. The way that people were talking at that conference 2 years ago, there's going to be a lot of M&A activity. People are saying the same thing now, and I'm just wondering what that looks like in 8 months' time. Let's review it then and see if they got it right, or whether the Bitcoin price does exactly what people think, rallies towards that 100,000. And if it gets to 100,000, does it help the miners? Well, it does, but actually it helps everybody. If the Bitcoin price is 100,000, you start probably plugging in S9s again or S17s, or whatever. You might have some of these less efficient miners maybe start you can make some sort of a margin with them. But who knows? I think it's been a good day today. Got through most of the questions. Put the questions in the comments if we haven't answered them, and we'll use them for the next podcast.
Yeah, and I tell you what, Anthony, if Mara does buy Bitfarms, you're going to be owing Rex Finance a beer.
I'll be off. That's me. I'll put it now. I'll be finished. There's no
okay,
way.
I'll take it over.
No way in this world, 100%. No way in this world that Marathon's buying Bitfarms.
Well,
no way.
Never
Absolutely
say never,
zero chance.
Anthony.
Zero
Okay,
chance.
guys, have a great weekend. Thanks so much for tuning in. Anthony, appreciate your time as always, and we'll catch you soon, guys. Cheers.